everybody, welcome back to the channel. And we've got a subscriber to this channel, the Covered Call channel. And by the way, it's at Covered Calls with Mark Yagi. That's me. And his name is Dead On Dave. And Dead On Dave has, been a fan of the channel for maybe a year or maybe even more. And he's been chiming in and making comments. And I really appreciate that when people chime in and make comments. And last week he chimed in and said, "Hey, Mark, I had a great year. And I also had a great year in VGT. So would you mind doing an analysis of it?" So I'm not exactly sure what kind of analysis he's looking for, because normally I talk about creating income from covered calls on this channel. And I'll give you my opinion based on, a lot of people like the way I read charts. So I'm going to give you that opinion based on the way I read charts. And I hope that's enough, Dead On Dave. But thanks for your comment. By the way, if anybody else wants to make a comment, happy to chime in every once in a while and do a little video. So here we go with Dead On Dave's request. So this is VGT, it's Vanguard Information Tech. And so you can see basically in the last year, this has gone up about 55%, 54%, something like that since January. Now, if you've been following my channel, you know that last January 9th, I came out and I said, I think we're going into a green market, everybody. We're going to a bull market. And we certainly are in one. We've been in one for a year and we're still in one. It hasn't changed. In fact, I think because the Fed's printing money, interest rates are going to come down. That's going to make assets go higher. That's what you're going to see in all these assets. So even though we're a little bit overextended in our buying, I don't think there's a stop coming up yet. There may be a pause, but I think we are on an uptrend. So let's look at this. This is a daily chart on VGT, which is an exchange traded fund, which focuses on the information technology. Now, in 2022, we had a bear market and the IT, the Apples, the NVIDIAs, all those tech companies got hammered. And then if you bought it at the bottom or close to the bottom, then you had a pretty good year, because in the last year, 2023, we had a good year. So that's why this did really well. It did about double what the S&P 500 did. It's not that great for covered calls and income production, but it did better. Let me read the chart for you. So if you look at this, and you can go back to where it says 372.21 there in February, that's a little channel that it made, a little consolidation channel from 372 to 343, those two swing points there, okay? It had a breakout point of 372.21-ish, right? And you can see it broke out on a little bit of a gap to the upside, and it came back and tested it a couple of times, but it really never looked back for the whole year. It might have gone, a couple bucks below, but it was testing a 50-day or whatever. And you can see from that 372.21 all the way up to basically almost 500 is where it went. And right now it's sitting at what, 474. So you're seeing that's the first stage base. Now bases what they want to do is they want to go up about 20 to 25%. And then there's a little consolidation happens, like a little stair step. And so you see that base, step, up 20 to 25%. And now it's making a second stage base. And that's in the form of a consolidation, but it's a W, right? A double bottom. All right, so a double bottom is basically this 462.97 swing point down to the 412 swing point.